Good evening, everyone. This is Michael at both Green Goose Trading as well as OptionsPlayers.com. Welcome to this summary of the ER 2022 spring earnings season. I do this every quarter, and I've invited a lot of other people outside of those that are in the current private swing trading ER strategies group at OptionsPlayers.com. So welcome. I'm going to try to go in and read chat. There's ability to chat and ask questions, so feel free to pose any question, and we'll come back to you. Those of you that are in the current group, if you want to reply to any of those chats as well, to let everyone know, yep, this stuff is legit or not legit, or to give any kind of transparency to what we do, that is welcome as well. So without further ado, I'd like to start with a quick disclaimer. Green Goose Trading and OptionsPlayers.com is not an investment advisory service. We're not registered investment advisors or broker dealers, and do not purport to tell or suggest which securities customers or subscribers should buy or sell for themselves. You should always check with your licensed financial advisor and your tax advisor to determine the suitability of any investment. It shouldn't be assumed that the methods, techniques, or indicators presented in these live streams will be profitable, or that will not result in losses. Past results are not indicative of future results. Examples presented here are for educational purposes only. These setups are not solicitations of any order to buy or sell. The authors, publisher, and affiliates assume no responsibility for your trading results. And as always, there is a high degree of risk in trading. In all of our live streams, we always start with money management. It is the most critical part about any kind of trading, categorically, fully, 100%. If you don't have money management down, you shouldn't be trading. And we always like to talk about what it takes to recover. If you lose 10%, it takes 11% to recover. If you lose 50% of a trade, it takes 100% gain to recover. If you lose 80% of an account, you need to quintuple your account again to get back to where the value started. Therefore, when we are doing trading in these ER plays, me personally, I don't want to lose more than 2.5% of an account. Okay, and I establish a certain size of account for my ER plays, and what that does is it gives me 40 chances to be wrong, but I know my numbers. And I really want to make sure that I'm stay on my numbers. My current win-loss ratio is well over 60%. So, but it's still, if I was wrong every single time, it would give me 40 chances to be wrong. My goal for a gain in general is 2 times the amount that I risk. So 5% of the account if I'm lucky. And that happens all the time. So money management is very, very, very important. Okay. And that's because successful traders lose money every day or every week. But what is happening is that they are making multiple trades or multiple trades every month, but they're winning more trades than they lose. But the reason people lose money is by not having rules. So what we do here is we establish rules, categorical rules about what we're going to do to get into a trade. And then those that lose money, they let their losers run. They cut their winners short. I even know others that do the double down thing, where they get a loser and they double down on their loser. And then a lot of times traders or novice traders will cut their winners short. Oftentimes I also see people going all in because they're so desperate, they go all in. And we go back to that chart that basically states if you lose 80% of an account, you need to quintuple it again. Okay. And then give up. This is why people lose. Okay, so in what we do is we always trade to a plan. Okay, so we never lose more than 2.5% of an account. We call it a paper trading account because we have to do that in any one losing trade. And we establish an account size of $10,000. Okay. And the other rule is that our goal is, at least for taking profit as much as we can, to have a reward to risk goal of 2 to 1, which is 2 times our risk. So it's very, very important to understand the money management piece. Okay, let me just make sure that we have people on and there are no questions. There's no issues. Okay, good. Okay, and this is recorded, so I'm doing this in a way that we can get a recording. Okay, so we don't, this Vimeo doesn't work here. So anyway, okay, so just get this. Okay, so for money management in swing trading, as I mentioned, we define our account size. Okay, and you may have less, you may have more, and you need to do what you need to do. But when I'm doing swing trading for ER season, I define my max loss as $250, which is 2.5% of a $10,000 account. So if I am putting in a position that I think that has a potential of making 100% loss, my position size is what I call an all-in position of $250. However, I can put more in, but I'm going to take a loss at $250 loss. So if I put a position size of $500 in, I'm going to have a 50% stop loss. This past earnings season, I have very, very, very rarely, we have very, very rarely put in position sizes of $500 or more. Most of our position sizes have been right here at the 250 mark. And we've made 33 trades. Okay. So stop is also based on a technical violation of a trade plan. We write a trade plan and we define where are we going to take our stop. It doesn't have to be on our amount that we're losing. We can take a stop if the stock that we're following doesn't do what it's supposed to do, meaning that we're wrong. Okay? This differs from day trading. A lot of day traders, I know a lot out there. I do day trading on the futures and the Forex side of things. You define I define when I'm day trading, my max loss is a lot less. And I do try to take my profit at least 2 times my risk. I don't normally day trade options. Okay. The other part is swing trading. When we are looking at potential trades outside of our standard earnings plays, what we're doing is we're scanning the market for setups on a prognosis if something is trending up, down, or sideways. And then also we're looking at earnings. We're looking strongly at earnings because what we want to do is we want to identify stocks, if we can find them, that have a probability of either moving up or down with the implied volatility in a wave. The implied volatility, which adds juice to premium of options, tends to increase going into earnings. So we want to actually go into our swing trading opportunities with stocks that are going to report earnings. And so if we can get that double whammy of getting the directional correct and getting the implied volatility rush or wave, that is a good thing. And we've had some great opportunities this last earnings season. Not very many, but we had a few. And it's actually done really well for our account. Okay. The other part is we need to identify where we're wrong. Okay. In fact, I think this is probably the most important is if I have a prognosis, when is it, at what point is that prognosis wrong? Because if I'm wrong, I need to exit the trade. I need to take my loss, take it with a smile. I've written about this. Take your losses with a smile because you know what? We're going to be wrong. I'm generally wrong 40% of the time. I've got a pretty good track record, but understand that you're wrong. Don't double down. You just get out. You take your loss. You adjust yourself out of the position. I want to know where the stock price target is. I need to know when the ER is. That's very important in what we do in this group, in this premium group, is when is the ER. So identify those stocks that are going to have an ER in the next, let's say 2 weeks, and then looking for those directional prognosis. And then we need to choose the most probable and profitable option strategy based on 1 through 4. The other part of what we do is we also know that volatility crushes. So a lot of this group, we talk about playing ERs and taking advantage of the volatility crush with stocks that don't move. So what we do, what we do is every Sunday evening, we go off, and this comes out by email to our private group for the coming week. I gave this out to readers of various groups early this week. It's usually after the fact for those that are not part of our premium group, and they are the candidates for the upcoming week. And there's certain rules behind it. So we do this every Sunday where we review. First of all, everyone gets this email with this, and we review what they are. We look at the back test of these particular candidates and then find additional candidates for the coming week for the directional side of things. So what we do is we take advantage of volatility crush over earnings, and we enter plays that have a history, a track record of not moving from a stock perspective and having a volatility crush and allowing profit to occur on an overnight iron condor. Okay, so these instructions go out. You can do it in the blog, you can read it, but essentially what we're doing is we are at the end of the day, just before earnings, we're taking an at the money weekly straddle, and we're adding the premium. So the premium here is for this is a past example on MS, was 145 plus 120. It was 273, and then we subtract and add that to establish strikes for an iron condor. Okay, so this particular iron condor would have been the as noted here down below. Okay, and then we take a look at the risk, and we don't risk more than $250 if things go belly up, and things do go belly up. CRM was a play, and CRM did not work out, and it's just the way it is. But then we track it. Okay, so we track it on any kind of tracking software you get. I use TraderSync. I love it, and we look at the track record of these plays. So all of the iron condors over this last earnings season, CRM is not on here yet. So let's see. Sorry, I did that. We need to sort via long iron condor. No, it doesn't want to do that. So we've had a lot of iron condors. Let me just sort it this way. And there are going to be losers. So you can see that all of these are iron condors, and we've had some losses and we've had some wins. Okay. But the wins offset the losses. So in the case of CRM was actually a loser. Okay. So what we're doing is we are entering these iron condors just before earnings. This is Tom's Option Tools. I entered one contract by selling a 175 and a 147 call and put, and then protecting it on the downside and the upside, $5 wide, and it sets you up here. Okay. So, and the goal is that the stock doesn't move, and the volatility, which is the red line here, crushes. Just like here on earnings, it crushes. Okay. And it takes premium out. And normally, under normal circumstances, if the stock doesn't move enough and the volatility crushes, we buy that iron condor back, or sometimes let it expire, and we keep all of the credit. Okay. This particular one had a max risk of 337. Unfortunately, CRM moved, and it's just the way it is. We need to be very transparent about this. It doesn't always work. Okay. It doesn't always work at all. Okay. So I actually, at the end of the day, bought this back, and I bought it back, and I got a $100 loss on this, but I'm okay with that because this earnings season, we have had a total of 33 plays, 34 plays now. And with that $100 loss, that means that my total profit over the earnings season was $2,449. Now, commissions are excluded. Okay. And so the win-loss ratio is above 60%, and that's pretty good for 34 trades. We have one more coming up this week, and I'll be doing the same thing if it corresponds to the criteria, meaning that slippage is bad or good, and so the bid ask isn't so great, and then the bid ask is great, is okay, and there's enough volume in the options, and there's enough profitability for this particular. So I'll be looking at CRWD in the same way. Okay, so normally this works very well, and normally we get a very good win-loss ratio. And as you can see, when we lose, it's potentially a total loss, but it's very rarely a total loss. Okay, and the wins offset the losses, and that is the name of the game. When I talk about money management is clear here also. With 33 trades, there have been 1/3 of those trades that lost, but the profit is more than 2 to 1. The average profit is 2.87 times the average loss. That's what that's all about, knowing the numbers. Okay. We did have some directional plays. Okay. We had some directional plays, and the directional plays worked out in a bigger way than the losses. It's always about taking more win than loss. Okay, so I'm very pleased with the performance this season, and looking very much forward to the next season, which is starting in mid-July. And again, this is through the optionsplayers.com. We have a premium group, and it usually works out very, very, very well. Just for an FYI, earnings season in the winter 2022, the win-loss ratio was 75%, and with a higher profit factor. So I track this every earnings season. And this is what we talk about in our blog. We give the results every week to those that are not part of the premium group, and that's fine. That's just in the hopes that people will learn and understand the psychology behind winning and losing, because none of us can win all of the time. It's just impossible. Okay, and for those of you who are not part of OP, there's quite a few on here, or we'll be reviewing this video. This is OP. This is the premium group right here. So that's Green Goose. I'm sorry. The swing trading, you can see it's very transparent, where these plays are announced just before. You can see that just before close, this was the CRM play. It got announced. Here's what I got into. This is before close on, when was it? Wednesday, just before earnings. So it's the same play. And very clearly at the close today, or just before open, said, oh, darn, big gap on CRM. We need to wait till EOD. Looks like we're wrong. And then, because I'm in Malaysia, I say morning. I closed the call credit spread portion of CRM for a total loss on the play. Once the put side closes on Friday, my total loss will be $99. I'm okay with that because it falls within my trade plan of losing less than $250 on a play, and also my win-loss ratio being greater than 60%. So I'm happy. I take it with a smile. It is what it is. Okay. And also for those of you that are not part of OP, we also have the normal chat with Steve, Trax, Greg, other instructors, mentors, we are in and not necessarily giving plays all the time, but we're actually mentoring the group on how to be responsible traders and giving ideas as well, and how we're managing the ideas. But a lot of members here. We got over 700 members in Options Players, and it generally a very, very good mentorship environment where we talk about both winning and losing. Brag a little bit, but if we instructors have our way, we want to make sure that people are bragging about losing as well. As far as I'm concerned, if my trade plan was obeyed, even if I lost, that is a success. So what I like to personally measure is I like to measure whether I follow my trade plan. Okay. So, and my trade plans look like this. So what I'm going to do now is I'm just going into the market very quickly to take a look and see, hey, are there any opportunities? Okay. So, and then I will close this video and this recording. So yeah, it's not showing anything. That's okay. Okay. So the way I find opportunities, the first thing I do is I go into Tom's Option Tools. It's a very good tool that I use. I recommend it because I use it. And I'm going to go in and I'm going to look for what is going to be reporting earnings over the next 2 weeks. Okay. Now their earnings season is pretty much over, but there are stragglers out there. Okay. And so what I want to do is I want to look at calendar days to next earnings. And I'm going to do that on anything with a weekly option, weekly stock list. Okay. Calendar days to next earnings. So, and there's really not going to be a lot. Okay. And I'm really not interested in anything that's reporting this week. What I'm more interested in is what is reporting starting next week. So I'm just going to get rid of these. See, CRWD is a play. And I am going to then also, let's see, okay. That's when they're going to report. So I'll start with Coop, and I'm just going to go out a couple of weeks. So I'm going to go out to 15 days. So that's going to be the up to 34. So that's going to be about, 20 stocks. So I'll just take the top 20. I overwrite. I replace it here. Okay. I redo the search on my stock list, and it's just going to show me the 20 that I've highlighted that are all reporting over the next 2 weeks. Now what I'm going to do is I'm going to take that list and I'm going to go and I'm going to look for the best IV change, implied volatility before 4 earnings. Okay. So I want to only look at those stocks that have a decent increase in implied volatility leading up to earnings. Okay. So that's going to sort those based on the highest IV. Okay. So we have a few that are, I really only like to take things that are above 20. And it's going to be those right there. Okay. We could go a little lower just to take a look. It's like Dave, Rensselaer. I don't even know them. I've never heard of them. Fuel Cell, Momo, ASO. So what then I do is I go and I look at these particular charts. Okay, so I can just do it really quick, down and dirty, and say, is it something I want to look at? That's the IV chart. Sorry. Let's see. I need to look at the stock chart. Okay. And is this something I want to look at? Okay. So we might want to look at it. Okay. Okay. That's Campbell Soup. So just look at CBP. Let's see. CBP, Coop, Stitch Fix, SFIX. We got ASO. We've got Momo. We've got FCEL. I don't know how the options are on these things. SOL. And we have Play. 1, 2, 3, 4, 5, 6, 7, 8. 8 things to look at. And then what I do is I go into my software and let's see, I'll just get rid of all indicators. And I go into my swing trading and I add whatever I'm going to be looking at. Okay, so CBP, CPB, how about CPB? Campbell Soup, sorry. Okay, and I take a look at it based on the daily. And is there anything that I see that tells me that there could be a directional bias to this particular stock leading up to earnings right here? And I always put a vertical line right there. Okay, so just get rid of these. Okay, so, and it's getting a little bit messy. Okay, doesn't really give me a lot of good feelings, but you just start doing some basic trend analysis and say, okay, is there anything here that looks interesting leading up to earnings? And frankly, I don't see any kind of directional bias on this one. So I would just throw this one out. Oop. I don't even know what these guys do. Software. Okay. So this is pretty interesting. You had a gap down on the last earnings, which is only in March, and then it filled the gap, came down, and now it's come back down, and now we're basing. Okay. So we're basing down here. And when you are basing before earnings, generally, you're not going to see any kind of directional bias. Okay, so I'm going to throw that one out as well for directional. Next one, SFIX. It's the same thing. We do have a downward trend, right? But we also are basing. We're kind of basing in this area with earnings coming up right here. Okay. There's too much area for me to be wrong. I don't even want to look at it anymore. So that's off the list. ASO. Okay. ASO, nice little gap down, nice little bounce, but for a 30-something dollar stock, we also are kind of basing. And we're right in the middle of the base. Okay, so I wouldn't be able to say with any good probability, unless we use that we're going to get any kind of directional bias. There is a potential of taking this down, but in the past, this has acted as a resistance, okay, with earnings coming up fairly quickly. So this doesn't speak to me either, and I've never heard of it before, so I don't even know if that has options. I'm not going to waste my time. Momo. Okay, Momo is a little more interesting. Momo's interesting because we have what is I'll just use this. This is a double bottom. Okay, it's almost a triple bottom. We'll just call it double bottom. But also looks like a W. And with the double bottom, I'm always interested is if it breaks this area. Okay, so this is a potential depending on what the market does tomorrow. If the price bounced in this area tomorrow, okay, if it bounced in this area tomorrow, it might be worth taking a long trade, okay? But earnings really is very soon, the 7th. So it's on the 7th. So, and today is it was the first today, tomorrow's the 2nd. So the 7th is on what day next week? Tuesday, okay? It could be worth it. Now I want to look at the options to see what could I get that could help me if we do get a continuation above that W bottom, above that double bottom, and also get implied volatility rush. So what I do then is I'll go in and I'll look at the Momo options, okay? And we have earnings coming up on the 7th. So I'll look at the options of that particular day. And when I go into a directional play, I really like to get something that is in the 30 delta range if the bid ask is good. Okay. Now, I don't know what's going on with this, but man, these things are cheap and we don't have a lot of, Momo is $6 stock. Okay. So I'm going to throw this one out right away because I don't trade options on stocks that are less than $10. But that W bottom is kind of the process that we go. Okay. So we look at it, we look at where we would be wrong. And then we identify what type of option, if all the boxes are checked as far as our formula goes about why we would take a trade. And then if there's no reason to not enter, then we look at the options and say, okay, now this is the type of option and this type of option strategy we're going to go. Now, right away, I didn't catch this right away. I don't trade options on stocks that are $6 or at all. Okay, I don't trade stocks actually on that are less than $15. So it's a no-go for me. Some people could go out there and say, yeah, hey, I'm going to do a $6 call and it's going to go up. Now, I don't like the volume. I don't like the bid ask. It's just a little bit too wide. $10 bid ask on options that low is really, really wide. Okay. So that's off the list as well. Next one, FCEL. Okay. That stock is $3.88. Not going to touch it. SOL. And that stock is, that's a penny stock. I don't even know what that is. No, I don't know what that is. I don't know where Sol is. Sol Tech Power. So it's not even on the list. So forget that. So the only last one to look at is Play, Dave & Buster's. I had the privilege of bringing my kids there last summer, and it's actually kind of a lot of fun. I enjoyed that. Okay, so what do we see with Sol, or with Dave & Buster's? This chart doesn't look that great and doesn't really tell me much about where a directional bias might be. We have based a little bit. We bounced. So there's obviously a clear resistance down here. But we've come back up, and I always tell you, when I see things like this, I'll do a little bit more advanced analysis on this one, is I always like to take a look at from the latest pivot high down to the latest pivot low, where is the fib? And you can see that we're bouncing, or we're seeing resistance up on the 38.2. We're kind of right in there. Okay, so that also, for me, this area represents resistance. So I would be interested in doing some kind of play on this if and only if tomorrow, for example, we got a red candle and it closed below the 38, right there. If it were a red candle. And if it did that, then and only then would I be interested in buying puts with a target down here before earnings. And even if it didn't get there, the question is, what does IV do? Okay, so this is possible. But at the same time, if that candle closed in that box, I wouldn't want to touch it. I'd have to have a little bit of a close above the 50 to be able to take it long, and really only taking it up to the 61.8. But again, riding on the volatility. So this could be a short. It could be a long, depending on where it goes tomorrow. Okay, retail's actually been hammered this earnings season. So this is what I would call a potential contingent play on a particular stock leading up to earnings, trying to capture the IV. Okay, so, and I know the options are okay on this. Let me just look at it real quick. Dave & Buster's earnings next week on the 7th. Update. And I would be looking at probably the 36 or the 35. I like to look at Delta 30. The bid ask is pretty wide. Okay, so I'd have to actually see these options having a narrower bid ask at the time of when they can be purchased, but also you have a very, very, very low volume. Okay, so just for a paper perspective, to understand how I deal with these potential opportunities. And I don't even think this is an opportunity because the volume of the options is crap and the bid ask is bad. But if it was okay during market period, I would think about it. So this is what I do. Okay, so this would be on the 2nd of June. I would only do this EOD last 15 minutes of open. Underlying is ELAY strategy. I would take a 30 delta put. I don't know what they are yet. Entry trigger. Price must close below 38.2% fib line. Entry rationale is what I call a dead cat bounce. Prior to ER, meaning IV increase likely. Technical stop would be one close greater than 38.2%. I got 38.2%. Technical target would be the pivot low. Position size, I would only take on something like this with less than or equal to 250. Stop loss 250. Profit target, I always use this word, ASMAFP, as much as effing possible. Time stop would be EOD day of earnings, which is the 7th of June. And the additional part is that if I got into this, would be, first of all, this is play. This is only contingent on option volume increase and acceptable bid ask. Okay. Right now, it doesn't look like it's a play at all. So again, this is really just to show how I deal with the trade plan and putting this up. And when I put these things up, if I happen to get, if I'm looking at a play, because I get up in the middle of the night at the end of the day because I'm in Asia, I'll post this up on my wall and I'll look at it and say, what am I looking at? And if it corresponds to my criteria, then I say go, and I print this out and I put it up on my wall and I follow the trade plan. The second the play goes outside of the trade plan, I exit at a loss. Right now, I can tell you right now that I don't think that this is going to correspond to any kind of criteria. So it probably is not going to be an opportunity, but I am, again, putting this up just as an informational on what we do in the Premium Swing Trading ER group every Sunday evening. Okay, so every Sunday evening, this goes out for the earnings iron condors, and then we also look at opportunities just like we looked at here. It gets a little intense in the middle of earnings season because sometimes we're looking at 30 or 40 different stocks, but we're filtering very quickly through. For example, the ones that we found this last earnings season, we were really, really conservative due to the choppy markets. But like the latest one was HPQ. Let's see, it's just you can take a look at some of the directionals. The Target was a directional. Apple was a directional, but we just used a butterfly dollar. You saw my post on that one. That was a dog. I broke some rules on that. That's the way it goes. If I hadn't broken my rules, in fact, it's the only play that I broke my rules on, and you can see it's the only play that had a bad loss. Okay, but the gains on the directionals have been pretty good. Okay, except for that little mistake. But you know, it wasn't as good as an earnings season as I wanted. But the ones that we did get close to offset the losses that we had on these. Normally, it's a lot better than that. I think we had a calendar in this. So the iron condors that we do are really the bread and butter. So, and they're generally very, very successful. In fact, I can do it this way. Let's see. Or I can do the type of spread to get the real. Let's see, long iron condor. Okay. So yeah, we had 25 long iron condors and 8 directional plays over this earnings season. So the long iron condors, we had a 72% win-loss ratio on the ones that are tracked here. What is not included right now is the CRM play, which was a loss. It was a $100 loss. So $1,430 in profit and roughly 70% win-loss ratio and a pretty good profit factor. Okay. So anyway, I'm going to leave this live stream here, and I'm going to put it up as a recording. And those of you that are interested in just keep going. We're going to keep doing this. We're going to keep putting these blogs up and giving a summary. And those, especially the OP members, we do have the premium group for you guys, and we're going to keep continuing doing that. So have a good evening, everyone, and I will see you on the chat waves and the blog waves. Thanks much.